Hey, this is Reginald Perryman with ReggieIsRealEstate.com. So today we're going to evaluate one of my $22,000 property listings. So I've had probably about 13 investor calls on this one. We just listed this property on Friday, and within 2 days we have 3 offers on it. So I'm going to talk to you about the pros and cons and how I would evaluate this property. I have some investors that stay away from some of the lower end properties, and some investors that just love these properties. So here in the Detroit area, there's like a price range gap. So what I mean by that is typically what you see in homes that you see between 10 and 20,000, they often need anywhere between $15,000 to $20,000 in renovations. Well, this particular property is somewhat unique because it is only listed for $22,000, and let's take a look here. So it doesn't need a lot of work, mostly just cosmetics, and it will cash flow. So this property is on Hull Street, which is just east of I-75, so it's between DeQuinder and I-75, and it's south of 7 Mile. So it's in the 48203 zip code, but it's not Highland Park. It's actually Detroit. So a lot of times when you go online, you're going to see listings that say Highland Park because they share the same zip code, but this is actually Detroit. So this particular property is a 3-bedroom, 1-story home. It's framed, built on a slab, so there's no basement, which has its pros and cons. So if you have a property that has a basement, of course it gives you more space for potential tenants or occupants, but a basement also comes with its own issues. So here's the living room area, pretty small, but as you can see, there's no damage. It's just outdated. You can't see the floors here, but the floors are hardwood. They just need to be refinished or covered. You can see the ceiling here where they did like the popcorn ceiling here, and you can see someone did a bad drywall repair here, but the roof is not leaking. Here's the kitchen, just outdated wallpaper, flooring, the kitchen cabinets. Now for a rental property, I would not, you can actually, for this area, you can keep the cabinets and sinks and everything here. You would just clean it up. I would replace and repair it, or we just repair this laminate countertop, which is pretty inexpensive. This is like the laundry utility room, so I would just clean this up here. Depending on your budget, you can replace a laundry tub, but it's not broke, so I would just clean it up. So basically what this property needs is painting and flooring. Again, wallpaper, replacing all your wallpaper. I mean, you can be in and out of this property for less than $5,000, right? So let's take a look at the property overall. So here's the MLS listing for the property, some details here. So oftentimes I get calls on these properties, and there are people that ask me about, well, Reggie, what about the after repaired value on this property? So in a property in this price range, you have to make a decision. You have to have a strategy going into the property. First, you have to decide if you're going to buy it to flip or if you're going to buy it for cash flow. Typically, homes in this price range are not good fix and flip properties. The reason I say that is because the ARV is just not there. So let's look at the ARV here for a moment. So 3-bedroom on a slab. So let's just do a quick breakdown here. So if we have, I'm just going to run this area comps. Just always it's going to give me Highland Park regardless. So I'm just going to run comps for 3-bedroom homes, and I'm just going to do square footage. The subject property is 870 square feet. So I'm just going to do 700 to, I'm just going to say 1100, right? And we can adjust for square footage. And I'm going to do a half mile. We don't want to go too far because we know in Detroit this can be pretty tricky. So let's just look at comps. The highest is 45,000. So we got 39,000, 35,000. But we have to keep in mind the subject property does not have a basement. So we may have to adjust $5,000 to $7,000 for not having a basement, right? And in some areas more. But let's just say, and then we have to look at overall condition and things of that nature. So this particular property is a little bit more similar to the subject. It's sold at 39,000 in 19 days. So the reason I say that this property is probably not a good fix and flip is because you're at 22. Let's say you put another 5 into it, you're at 27, and you're possibly looking at 35 to 39,000. Probably not ideal for fix and flip because of the profit spread. Now, 10 or 15,000 is still $10 or $15,000, but you have to consider your holding costs, capital gains, commissions, and closing costs and things of that nature. So it's probably not a large enough spread. But let's look at this from a cash flow standpoint. Now, if we just go with homes that were leased or that's active, here's not many that were leased recently in the past year. So I'm going to have to go out. I know this area, this home typically sold, yeah, that's what I figured. So between like $750 and $800 is what this property would rent for. This particular property here rented for $775, but it was only a 2-bedroom, but it did have a basement. So roughly about $750. So basically you're spending $27,000 to make $750 per month or more. But then you have to factor in your taxes and insurance and maintenance and your other fees. So if you're going to have management costs as well. So you're probably going to clear on a property like this, you're probably going to clear about $500 to $550 per month, which is not bad based on a $27,000 investment. Now, here's the other option. Let's say you took that property and you sold it on land contract for, say, you put the 5 into it and you sold it for, let's say, $39,000, $40,000 on land contract, and you had a buyer give you maybe like $7,000 down, which is not out of the question for the area. So a buyer gave you $7,000 down, and let's just say, let me use my favorite amortization calculator here. So let's just say, okay, 39,000. Let's just say, since it's a land contract, let's just do, and let's just say your net on a rental was going to be 500. So let's just say the buyer's going to pay their own taxes and insurance, but you want the same monthly income. So let's keep it at $500 per month, and let's just show our amortization here. So if you sold it for $39,000 with $7,000 down, the balance the buyer will owe you would be $32,000. 8% interest. I just used that because the most you can charge here in Michigan is 11%, but 8% is higher than the current mortgage rates. But you have to factor in this is a little bit higher risk. I typically charge between 6 and 8%. I don't normally charge the maximum of 11% because you still want to be somewhat competitive. But on a smaller loan, but it's a little bit higher risk, you do want to consider your risk factor as well. But at 8%, $32,000 with the buyer paying you $500 a month, you're basically going to make you're going to make a total with interest and everything. You're going to make a total of $41,000, just over $41,000, in addition to the $7,000 that you got down. So you got 27 invested, you got 7,000 back. So now you just have 20,000 invested, and over the next, let's say if you want to do it for 84 months, you're going to make an additional 9,000 in interest as well. So your total repaid would be 41,000. Now keep in mind that this is not taxed the same. The capital gain taxes are not the same as if you were to buy and flip the property within 2 or 3 months, because this is an installment payment. So that is another option for you if you are an investor. But again, I get tons of calls when I list properties like this, but we just want to keep in mind what's the best strategy for the property. Now I list the property for the seller because it is a good market price for the seller, so we want to keep that in mind. Just because it's cheap don't mean it's a good deal for you, and just because it's a good deal doesn't mean it's a good deal for you. There's plenty of good investments out there, and there's plenty of good deals, but everyone is not going to meet your investment criteria, so you want to keep that in mind. This is Reginald Perryman with regiusrealestate.com. Just checking out. If you have any questions, feel free to visit me at regiusrealestate.com or just contact my office, 248-291-8057.